There's four metrics that we use in the alpha V WAP. The first is the current V WAP, followed by the V WAP forecast, the final V WAP benchmark, and finally the alpha line. There's two models that we'll introduce. The first is the discount to premium model, and the second is the inflection point indicator model. The optimal execution schedule for the alpha V WAP is to buy child orders at a discount to the V WAP and at the near-term lows, and sell child orders at a premium to the V WAP and at the near-term highs. The general strategy is to capture alpha during the early and middle trading periods. We monitor the arrival price of the parent order relative to the V WAP forecast, and finally we satisfy the parent order late in the trading period. Here's the dashboard for the alpha V WAP. We see the top chart with the market price in blue, the V WAP and V WAP forecast in red. The middle chart is the discount to premium model that simply measures the difference between the market price and the V WAP. The bottom chart is the inflection point indicator, which is a patented indicator that gauges the momentum or strength of the market. It also measures the near-term highs and the near-term lows of the market price, the inflection points. The child order execution schedule is based on using these three tools. Now we'll talk about the metrics. First metric is identifying the path of the current V WAP. We want to understand the trajectory of the V WAP and where the V WAP is going. Next, we present a V WAP forecast for the end of period V WAP benchmark. Here we see the market price trading above and below the V WAP, but the V WAP forecast gives the trader a range for the child order execution schedule for the final V WAP. Finally, we identify the final V WAP benchmark. This is a pretty academic metric, but it's really important to understand that the final V WAP benchmark is the metric that the arrival price of the parent order is compared to. Continuing that thought, we use the final V WAP benchmark to construct what's called the alpha line. And we understand that for buy orders, the arrival price of the parent order must be below the alpha line. For sell orders, the arrival price of the parent order must be above the alpha line. Now we'll talk a little about the discount to premium model. Again, this measures the difference between the market price and the V WAP, and it measures when the market price trades at a premium to the V WAP, as well as when the market price trades at a discount to the V WAP. And again, we base our child order execution schedule on when the market price trades above and below the V WAP. Finally, we'll speak about the inflection point indicator. This, again, is a patented indicator that measures the strength or momentum of the market price and measures when the market price is trading at the near-term highs and at the near-term lows. And again, we use this metric to base the child order execution schedule. We always want to trade on the inflection point. In other words, buying at the near-term lows and selling at the near-term highs. The optimal execution schedule is based on buying child orders at a discount to the V WAP and at the near-term lows, as well as selling child orders at a premium to the V WAP and at the near-term highs. Here again is the dashboard for the alpha V WAP, and our goal is to sell child orders when the market price trades at a premium to the V WAP and at the near-term highs, as well as buying child orders when the market price trades at a discount to the V WAP and at the near-term lows. The general strategy is to capture alpha during the early and middle trading periods. Here, we buy long child positions when the market price is at or near the V WAP, and we look to sell child positions when the market price trades at a premium to the V WAP. In this example, we've captured 26 basis points in locked alpha. We continue on the trading day and we look to sell child positions above the V WAP and buy child positions below the V WAP. here capturing 28 basis points in locked alpha. The same general strategy continues, buying child positions below the VWAP at a discount and selling child orders when the market price trades at a premium to the VWAP. In this example, we've captured an additional 18 basis points in locked alpha. Locking in alpha provides a cushion for the overall arrival price of the parent order. This, in a sense, lowers the overall execution cost by improving the arrival price. Next, we monitor the arrival price of the parent order relative to the VWAP forecast. By this we mean, after capturing 26 basis points in locked alpha, our first trade, our arrival price is now $29.99 against a VWAP forecast of $30.10 to $30.33. We always want to keep the arrival price of the parent order better than the VWAP forecast. Our parent order is to buy 1 million shares over the course of the trading day, so that our arrival price, currently $29.99, is below the VWAP forecast. During the next trade, we've captured an additional 28 basis points in locked alpha. This lowers our arrival price to $29.46 against the VWAP forecast of $29.97 to $30.17. So our buy order, the arrival price of our buy order, is below the VWAP forecast. Our third trade, we capture an additional 18 basis points in locked alpha for a total locked alpha of 72 basis points. This, in effect, lowers our arrival price all the way down to $29.48, well below the VWAP forecast of $30.05. Again, we always want to keep the arrival price better than the VWAP forecast. And late in the trading period, we look to satisfy the parent order at or near the VWAP. Up until this point, we've captured 72 basis points in locked alpha, and we satisfy the parent order at or near the VWAP, in this example, 30.13. This example does not take into account transaction costs and market impact. Again, it's just for educational purposes only, to understand the methodology of the alpha VWAP. So in this example, by capturing alpha and satisfying the parent order at or near the VWAP, our final arrival price is $29.41, well below the final VWAP benchmark of 30.13. And so to recap the alpha VWAP methodology, the four metrics that we use: the current VWAP, the VWAP forecast, the VWAP benchmark, and the alpha line. The tools that we use: the discount to premium model and the inflection point indicator to base the child order execution schedule on. The optimal child order execution schedule is based on buying child orders at a discount to the VWAP and at the near-term lows, and selling child positions at a premium to the VWAP and at the near-term highs. The general strategy is to capture alpha during the early and middle trading period, providing a cushion and lowering our arrival price. We monitor the arrival price of the parent order relative to the VWAP forecast. And finally, we satisfy the parent VWAP order late in the trading period. Thank you.